Let's begin with a look at how the markets performed this week. We'll take a look at global energy commodities now. We can see that Brent prices were down, but still, a couple of weeks ago, they reached nearly a several-month high at almost $100 a barrel. We saw Saudi and OPEC Plus members holding out production cuts till the end of the year. Will traders price in easing on those cuts? We'll see. But what we do know is that inventories in the US and supplies are tight as we approach the refining maintenance season. Throughput levels are also falling. So perhaps prices will stabilize somewhere near the $95 barrel mark. Also, we see that gasoline is down, but natural gas actually is up, holding strong. Let's take a look at Nigerian equities now. Well, it was a bearish end to the week on the Nigerian Stock Exchange. And I think that's really largely related to what's happening on the FX market. The stock exchange, actually, the all-share index did fall to just above 66,000 points, dropping by 10 basis points on the market. Thankfully, some recovery happened midweek due to banking stocks and consumer goods, but still very, very modest trading volumes at about $5.8 million worth of trades. That's about 4.53 billion naira. Well, elsewhere around the world, global equity markets were looking bright. Euro Stoxx 600 was up, as were some of the other main exchanges in European markets. We see FTSE 100 was up by 8 points. DAX also up, CAC 40 in Paris, and IBEX in Spain up. In the US, on Wall Street, a mixed picture there. The Dow Industrial Index was down, but NASDAQ and S&P 500 held up strong. I think globally reflecting some positive signs, particularly in Europe, around slowing down inflation in the Eurozone. Well, let's also see what my business top picks for this week are. Interesting developments in the world of tech in particular. Amazon is going to invest about $4 billion in AI startup Anthropic, trying to mirror their OpenAI's relationship with Microsoft. Many of these startups are looking to tap into chip manufacturing and data services, and Amazon says it will invest initially $1.25 billion in Anthropic, an AI company also doing generative AI like OpenAI. We've seen quite a few of these deals coming to market, and if that deal does go through, it will value Anthropic at least $9 billion. Well, what else is happening elsewhere? A bit of geopolitics and trade now. Saudi Arabia and Israel could be on the verge of a historic deal to accelerate a US-backed project linking Europe to India. If you recall, the Abraham Accords of 2020 did actually link trade between Israel and the UAE. Saudi and Israel now looking to do the same. The US is leading that negotiation on the back of President Joe Biden's announcement at the G20 summit in India some weeks ago that we were looking at a trade corridor that would link India to Europe. Of course, several hurdles remain in the way, not least Saudi's call for a Palestinian state, which might be a tough ask for Netanyahu's nationalist government. So interesting developments there. Will a deal happen? Will it not happen? Well, time will tell. Elsewhere in the news, what do we have here? Well, OpenAI seeks about a $90 billion valuation and a possible share sale. It's also allowing employees to sell their shares in this coming share sale. Of course, Microsoft had invested about $13 billion in OpenAI last year. It's regarded as one of the handful of companies at the forefront of generative AI. So a big deal there on the horizon for the tech world. In the Middle East and North Africa, Egypt and UAE are signing a currency swap deal worth about $1.4 billion. The North African economy of Egypt has been struggling with a major fall and tanking in its currency, the Egyptian pound, and the deal is said to involve up to 5 billion dirhams and 42 billion Egyptian pounds. Egypt, of course, has seen one of the worst currency squeezes of any African country in recent months. The central bank said it was also considering a similar deal with China. Of course, the UAE has done this type of deal before, also entering into a currency swap deal with Turkey in January last year. And finally, South Africa's Transnet CEO has quit. The company has not been doing too great. It's a freight rail company in South Africa, publicly owned, not doing too great in its revenues and making a loss of $302 million in the fiscal year ending March. So the CEO has actually stepped down, Portia Debbie. She will be stepping down actually at the end of October. Well, interesting times there for Transnet in South Africa. And now for some other stories from around the world. Starting in Nigeria, the National Deputy President of the Trade Union Congress, Tommy Etim, on Thursday berated moves by the federal government to hamstring the organized labor from embarking on an indefinite nationwide strike from Tuesday using the courts. Etim stated that labor leaders would not succumb to any threat by the government, noting that they were ready to go to prison in their fight for better lives for Nigerian workers. The TUC Deputy President said this against the backdrop of the warning by the Attorney General of the Federation and Minister of Justice, Lateef Fagbemi, SAN, that the proposed strike by the Nigeria Labour Congress and TUC was in contravention of a subsisting court order restraining the unions from declaring an industrial action. The Nigerian National Content Development and Management Board and international oil companies operating in the country have signed an MOU to reduce the cycle of contracts within the sector. Key benefits of the framework in the MOU include a reduction of the contracting cycle for open competitive tenders, selective tenders, and single sourcing tenders to 180, 178, and 128 working days, respectively, compared with the current best effort performance of more than 300 days in most cases. JP Morgan's British retail bank Chase will ban crypto transactions made by customers from October 16 due to an increase in fraud and scams, the company said last week. Chase has become the latest lender in the UK to restrict customers' access to crypto amid long-running concerns over the use in online scams run by criminals. Chase informed customers of the planned policy change by email on Tuesday morning, the bank confirmed. Crypto media outlet CoinDesk also reported the move earlier the same day. In the US, the Federal Trade Commission has filed a long-awaited antitrust lawsuit against Amazon on Tuesday and asked the court to consider forcing the online retailer to sell assets as the government accuses big tech of monopolizing the most lucrative parts of the internet. The FTC accused Amazon, a company started in a garage in 1994 and today worth over $1 trillion, of fighting efforts by sellers on its online marketplace to offer products more cheaply on other platforms. Amazon forces sellers to use its warehouses and delivery services, inflating costs of consumers and sellers, the FTC said. Well, more than a week into the targeted strike at the three established U.S. car companies, the chief executives of GM and Ford blasted United Auto Workers leaders on Friday, and UAW chief Sean Fain responded in kind hours after the union escalated the strike that is now in its third week. Fain on Friday expanded the first ever simultaneous strike against the Detroit Three, ordering workers to walk off the job at Ford's Chicago assembly plant and GM's Lansing, Michigan assembly plant. He said Stellantis was spared after last-minute concessions by the Chrysler parent. Well, there's more reason for nerves as the quarter closes with a U.S. government shutdown looming for October 1, with a stern warning that potentially puts the country's last AAA rating on the line. However, it does not expect government debt service payments to be affected and said any shutdown will likely be short-lived and limited in its disruption of the U.S. government. Italy's government has rethought its controversial windfall tax on banks after widespread criticism, including for the European Central Bank, news agencies reported Saturday. Banks will be able to choose between paying the levy or boosting their non-distributable reserves, which cannot be paid in dividends, by an amount equivalent to 2.5 times the tax, according to a proposed amendment. According to two persons with knowledge of the situation, HSBC is planning to purchase Citigroup's China Consumer Wealth Management Company, which oversees more than $3 billion in assets. This will significantly expand the London-based bank's operations in that nation. One of the sources reportedly stated that the few hundreds of Citi's employees who work in China will be transferred to Asia-focused HSBC as part of the transaction, the financial terms of which were not immediately disclosed. As the largest lender in Europe, pledges to leave less lucrative regions in order to concentrate on Asia, its main source of revenue. The acquisition adds to a litany of steps taken by HSBC to develop in China, one of its core markets.